I don't know why they choose to stress me. Okay, can you see my screen? Can you guys see my screen, please? Can you see my screen?
Yes, yes.
Okay. So I won't talk much. I won't talk. You can mute yourself now. You can mute yourself now. I will not talk much. I will just explain what I did today and what I did wrong also, which was this. Okay. Now we've seen this structure. It has been in an uptrend for a very long time. Higher high, higher low. We see GU has been in an uptrend for a very long time. It broke this high. Yeah, it broke this high. It broke this high. So I will say from year to year, we have a trading range. And the reason I said from year to year is because market has not come back inside, but that's not the bias. If I'm looking at bigger higher time frame, this is going to be where if I'll be saying to read this low then, but that's not what I'll be looking at now. Market, I want to follow the other flow. Now market has been creating higher high, higher low, and yeah, we have another break of structure around here. We have another break of structure. Market on the what internal break and mitigated properly, and not just that it's mitigated, it's on liquidity. So this low has turned to what a strong low. This low has turned to a strong low. Let's mark this place. This place has been mitigated. This is how to trade. You mark all your mitigated area and unmitigated area. Now this place, this area, we have a break of structure here. This area has not been mitigated. This area has not been mitigated. This area has not been mitigated. We have a break of structure, but it has not been mitigated. We have a break of structure here. It has what? It has been mitigated. So everything here has been mitigated. Now we have another break here. This place has not been mitigated. So we have aunt. This aunt shows that this is a strong low because this place haunted liquidity before moving up. And if you check higher time frame, if you check 4 hours time frame also, it's also haunted what? It's haunted liquidity. Let's see network. It's haunted liquidity on 4 hours, which was this. This is it. It's haunted liquidity. So it shows that this place is a what? Is a strong low. But if this place got validated, that means we're expecting a sell to year or to year. Probably because looking at this place haunted liquidity also on 4 hours time frame. From here, from this low on 4 hours time frame, from this low, the haunted liquidity, I'm coming on from this low to this high, we have a new what? A new trading range. A new trading range. So if you're expecting price to come on higher time frame, we'll be expecting price to come inside there. Why this place will be liquidity? Internal liquidity. Yes. If you're expecting higher time frame order flow, this place is going to be internal liquidity, and why everything here will be what? This place is going to be the internal liquidity. Why this place will be the point of interest we'll be looking at. But now let's look at the order flow. 1 hour also indicated that this place is going to be what we are going to be looking at. So even though price clear everything here, if price should clear everything here, price doesn't mean it is a strong bearish. The reason I said it doesn't mean it is a strong bearish because this is the last lower high on higher time frame. This is the last range low. So from year to year we have a range on higher time frame. So if you are meant to work on higher time frame order flow, we'll be expecting price to clear everything here, then come into this proper place before what? 18 TP going to our direction. So we'll be expecting is buy from here to this high. Are you getting me? So this is on higher time from 4 hours to what? 1 hour. I get to see that this is a what? A liquidity, internal liquidity. But if you should go to 15 minutes, now let's go to 15 minutes. 15 minutes in total. Following 15 minutes order flow, the only thing before we can note that okay, this trade has turned to a short sale, it is when price invalidates this low. If price should invalidate this low, because on 15-minute time frame, this is a what? A strong low. Look at it. Break of structure mitigate. This place wanted what? Liquidity and broke structure. It wanted liquidity and broke structure. So it gave something like this: high, low, break. It has given a structure like this. So we want a structure to complete it like this, then boom. But if eventually this place got invalidated, that means we have broken to the downside like this. We just look for a short sell to this area, because on bigger time frame, this is our point of interest. On bigger time frame, this area is our point of interest. So even though we are buying from here, we will not take much risk, because price can decide to clear everything and come to the proper one. We don't know. We can't see. Price might decide to clear the liquidity instantly and come to the proper one. But don't forget, this is strong low. So from this low to this high, on shorter time frame, we have a trading range. So this is inside the 50%. Now, where is our internal liquidity? This is going to be our internal liquidity, because we don't have any liquidity. This is going to be our internal liquidity. Why price we use something around here or here to buy, if price will be buying, waiting for confirmation, because at this scenario, this retracement is coming from higher time frame. So price can decide to clear this internal liquidity of higher time frame to sweep this place, to clear this place and come to the proper point of interest before buying. I don't know, maybe you are getting my point. This is higher time frame analysis. So from this low to this high, we have a trading range on higher time frame. But on shorter time frame, from this low to this high, we have a trading range. So even though we are buying, it can just be a short buy. It can be a short buy, not long buy. Then what? Come back to this place, because we are working on higher time frame. Then move to the nearest point of interest. Now, like I said, I won't be talking much about market structure, because I've explained enough, and I literally sent enough video for you guys to watch. So now look at this trade. How did I pick this trade today? Okay, I saw price as clear this place, and I was waiting for price to come inside. I waited for price to come inside, but price did not come. But we have a breaker. I told you one thing about breaker block: a supply that failed. There is supply around there on 5-minute time frame. There is supply around there, so it is supposed to reject this price and break structure, but it's failed. So this area has failed us already. We have a field here. This place has failed us. After failing us, it went up. That means we have a break of structure. So if price is coming back, before price will come inside, price will make use of the breaker first. So I saw price tapped into this breaker and push, and it gave a break of structure. After giving a break of structure, it will come back to to mitigate, which was this. Let's see the structure: one, a break, low, and high. And I told you one thing about structure, that this place will turn towards internal liquidity for this, then move. That was where I get it wrong here. Now, I was expecting price to use unmitigated 5-minute point of interest here, but I forgot that when price is ready to retrace, it's going to give QM information, and normally it is not good to trade at equilibrium premium level. Now this is premium level. Fine, I traded here, it went to my direction. I forgot that this is still premium level. It is risky to trade, very risky to trade. So any information that is being given here will be a trap. So I forgot. After eating here, I was like, okay, since I have that information, which was this, since I have this structure, high, mitigation, break, and I know this place is going to turn to. So I forgot that this happened inside premium level. That was how, and precisely I've been reading $1,400 here, and the target was $3,900. I've been reading $1,400 before I saw my stop loss. I came back to check my MC4 and my 85, and I see my stop loss has been what, taken out. So it was my mistake. Yeah, it was my mistake. So how did I get this entry? Now let me cut it out for you. This is how I got my entry. There are some scenarios. This is a breaker block. Now it's mitigated this breaker block and went up. Broad structure. This is my point of interest. This other block here is my point of interest. That's my point of interest. That other block is my point of interest. So I'll be buying to the nearest eye, which was this place. This eye was the previous eye. So I'll be buying from here to here because I saw a break of structure and I am still around this breaker block. So that was how I got my entry. Boom. Can you see? But there's another information price give here for those people that don't know the use of what? The use of breaker block. Let me cut this for you. Sorry. Let me cut this for you. Apart from this price came to pick a breaker block, it gives another information. Now it's wanted liquidity here. It's wanted liquidity here. Let's see if you have a break. Sorry. It's under the liquidity there. It's broad structure on 15 minutes. If you go to shorter time frame, this is strong structure. If you go to 1 minute or 3 minutes, that is a strong structure. And this place is going to be liquidity. Yes, this place is going to be the liquidity, but you can use it as entry. Since we don't have any point of interest around here, you can use it as what? As entry. Then your stop loss will be at the back. Then target this eye. Month of liquidity and break of structure. This is a break of structure. So we have inducements and we don't have any point of interest anymore. You can use that inducement as entry if you don't have any point of interest here. So let's see. Can you see? Mitigated and boom. TP it. We have a break of structure properly. If you can't take this kind of setup, look at the structure. Higher high, higher low, higher high. A break. So I have all this liquidity. I have this liquidity. I have this liquidity. I have this liquidity. So I know price. Once price clear everything, at least it will still buy. And this is going to be my point of interest. This area, this candle, is going to be my point of interest towards to continue to buy. And this place wanted liquidity. Can you see? It's wanted liquidity before breaking structure. So this place is a strong low. That was the reason why I put my buy entry around there. And let's see. Now, this is where I got it wrong. Look at this information. Lower low. Higher, lower high, lower low. Lower high, lower low. Mitigation. It's mitigated here. But we have unmitigated week here of 5 minute time frame. This lower high. I'm expecting another lower low that will rate this as liquidity and make use of this place and what? Boom. The structure. Let's see. Yeah. Can you see? Price mitigate and start going. But I fucked up. The reason why I said I fucked up was because I did not take note of this level. It is inside this premium level. As when I take note of this level, like from this area, from this low, this shorter time frame range. As when I take note of this shorter time frame range, I would have stay out of here. I've like stay out. I told you something like it is not good to trade in premium if you are buying. It is not good to buy from premium or equilibrium. expect price to come towards discount. Then if you are selling, expect price to enter premium to what to sell. So I made a mistake here and I've corrected myself so on that. So now from here, from this high to this low, we have a trading rate. This is internal liquidity. So anything can happen around here because this is strong rate on liquidity. So anything can happen around here. If we have a buy confirmation around here, we'll be buying to clear this high. To clear this high because this is what a weak high. But if this high eventually break this low, if this high cause a break of this low, then this low has turned to a weak low. Why this place has turned to a weak high? Then we will look for a short sell to this area because on 4 hours time frame or 1 hour time frame safe, it's indicated that from this low to this high, we have a trading rate, and this is our point of interest. This is our internal liquidity. But we can't say if price is going to clear it instantly. It is not instantly price came back to clear everything. Price will not come instantly. It is not every time price will come instantly and clear everything. So we'll just follow the other flow. We'll wait for based on confirmation. If we see confirmation around this area, we'll be buying to clear this high. But if we don't see confirmation, we'll just wait patiently for this low to be taken out, then look for a short sell, then to here, because price can clear this low out and go back and give you sell confirmation, then come before another buy. So for those people that are asking me to just recap on market structure, this is how I mark my market structure. Sometimes if I don't want to get confused, I will draw the structure I see. If I see like, okay, this structure is not what I understand, I'll just stay off the market. So you get alongside when we get to supply and demand, I'll talk about how I define my structure from 4 hours to 1 hour whatsoever thing like that to 15 minutes. And we'll be talking about supply and demand zone tomorrow. Yeah, we are starting supply and demand zone tomorrow. Supply and demand zone tomorrow. So if you have any question, please you can ask me. If you have any question, let me unmute some people here. I'm coming on. I want you to unmute some people. So any question, please? Any question concerning what I explained tonight?
I want to ask something, boss.
Okay.
Yeah, you said you are going to talk about the trading journal. Like now that we take some time, can we just use this little time? That
Okay. You can meet yourself back. Now, there's something about trading journal. We have trading journal, then we have trading plan. Okay. Now, this trading journal is keeping records of your trading. Now, let me share my screen. I'm coming. I want to share my screen based on something. Telegram. Stop sharing screen. I want to share my screen based on something. Video. Share screen. Where's my Telegram channel? Okay. Share and can you guys see my screen? Look here. My what?
yes,
My back testing journal. Can you see? Can you see? Don't let me go far. Yeah. The trader I picked, everything. I have to go back. Wow. Then see the reason. Price rejected from the strong POI I did not take note of. A low that wanted liquidity, which has turned to a strong low. Yeah, I was looking for a long sell. That was last week, if I'm not mistaken, or last 2 weeks. So this place, I did not take note of this place. I have to take it to my journal. I created a page on Telegram to save it there. So next time I will not make that single mistake. Now look at this. I hit stop loss because I pick lower TF entry. My plan is not to pick entry lower than 15-minute entry. Now, first year, this place, I did not hit stop loss. Secondly, I hit stop loss because I pick it from somewhere here. Then I have to re-enter again. So I have to draw it as like I promised myself not to take trade on shorter time frame. Now look at this one also. There's a reason why I dropped this here, and I have to back test it back using my video. What did I do wrong? Can you see? So now I did not take note of this imbalance. It's SL because of the imbalance. Now I picked my entry around somewhere here, but the trade just eats my imbalance and moves to my direction. I have to come back to my trading journal. I did not what take note of my what imbalance. So you get, so yeah, breaker block and a breaker block structure. Yes, can you see? This is a breaker block and a structure. I have to journal it down so that next time when I see this thing, I know I will feel like, no, I have it in my journal. I traded it yesterday or some month ago, so I still have it in my journal. This is the structure. Now tonight I'll still go back. I hit stop loss because I did not take note of the premium zone. You get, so journal is going to help you in the aspect of you I'm coming in the aspect of you making mistakes. So now let's say you trade today, you hit stop loss. You have to go to your journal, write the reason why you hit stop loss, and backtest and check what you did wrong. Oh, this is what I do wrong. This is so thing I do wrong. Okay, let me correct myself. Then you go to that your journal, you write it down, you journal it down. Like, okay, this is what I do for me to hit SL. This is what I did wrong. So that is journal. And not just that, you write it like, this is what I do. You are going to write your record. If I have a PDF on journal, I'm going to send it to you guys. A record, the trade you pick today, the lot size. Do you hit TP? If you hit TP, you mark it there. If it's break even, you mark it there. If it's SL, you mark it there. So keeping record of your what? Of your trading. Because if you don't keep record, you're just doing it in vain. You will not know how far or how well you have been, what you have been. You will not know how far or how well you have been doing. You just keep trading like as if you are the owner of the financial market, and meanwhile you are doing it wrong. So once you have journal where you keep the secrets there, what you did wrong, your profits and everything, when you keep the record of your trading, you see like, okay, you get to understand more about market structure, even though more that I could not explain. You get to understand them yourself, because if you test, you'll be like, oh, this is what I did wrong here, or let me correct myself from my journal. Then you have to go to your journal, that chart, then you type the mistake you made and the correction in case of next time. And there are sometimes, even though you did not hit SA, if it is CP, save it, because anytime you see that kind of structure and you have it in your journal, you'll be like, oh, more, I have this thing in my trading journal, I understand this structure, I will risk like this. You'll be sure, you have confidence of risking because you have witnessed that kind of structure before and you have it in your trading journal. That's it. And trading plan is like, okay, you trading any accounts you have, okay, I will not risk more than 0.5, which is 0.5% of this account. I will not be risking 1%. I will not risk more than 0.5. Okay, today this is the total loss I am making. This is the stop loss I will be using. Anything beyond this stop loss, I will not be trading. This is my lot size. Anything beyond this lot size, I will not be, it can be below the lot size, but anything above this lot size, I will not be trading. Okay, let's say I have 3 pips SL. I'll be using one lot size, risking $30 for this. Okay, let's say we have 30 pips, 5 pips SL. If I should use one lot size, that is $50. Let me minimize this lot size. Okay, let me use 0.5. That's $25 loss. You must not have above that your risk, that your particular risk. Let's say you want to risk $30 today. Anything you are doing, any trade you want to pick, no matter the stop loss you have, just limit the lot size you're using. You must not have above that $30. And there are sometimes you feel like, if I don't see this structure, I will not trade. If I see so structure, I will trade. If I don't see this confirmation, I will not trade. That is how to do with your trading plan. You have to plan your trade. If I don't see this thing, I'm not trading. If I see this thing, I'll be trading. You have to plan your trade. So that's just little explanation. The way I'm explaining, I'm feeling something. So that's the reason why I don't want to talk much. So I think that one is clear a little bit to you. You gotta ask the question. I
Yes,
think it is.
yes.
Yeah. Any other question from anyone?
Hello, boss.
Good evening.
Good evening. Though the this pair you are talking on, though I actually took the same trade with you, but eventually it end up in loss also. But at the same time, my question is this. There was a question I asked you some time ago that using the long and short position, the can on trading view, how do you set your number of pips in trading view for you to know that okay, this is what I'm risking and this is not what I'm to risk?
Okay. Let's say this is your entry. Let's say this other block. You can mute yourself now, please.
Okay.
Let's say this is your entry and you're trying to sell from here. Let's say this is your entry. This candle is your entry. You know how to mark your other block. You are trying to sell from here. Now, shorts. You see these shorts. This is long. Long is if you are buying. See these shorts. You click on it, then where you are buying from, you are selling from. This is your entry. Then your stop loss will be at the back. Are you getting me? If your stop loss will be at the back, let's say you are targeting this low as your TP. Now, it's indicated here. This is your entry. It shows, see the number 1.26386. This is the entry number. Why the stop loss 1.26445. Now it has indicated like 5.9. Can you see this 5.9? This is what 5.9 pips stop loss. Let me adjust it. 4.7. This is 4.7 pips stop loss. Now, this 4.7 pips stop loss, if you use one lot size, if price read this stop loss, you have $47 loss. If you use one lot size, one standard lot, you have $47 loss. If you use 0.01, you have 0.47 cents. Yes, if I'm not mistaken, 0.47 cents. So if you use 10 lot size, you have $470 loss. So that's, I think, from where you learn your basic class from, they would have tell you about lot size, standard, mini, and micro. Now from
Sure.
one,
Sure.
yes, 0, 0.01, 0.02 upward. So now this is it. So once I have 0.04, if 0.01, if 0.01 read 10 cents on 10 pips, let's say we have 10 pips, then I use 0.01, it is going to read 10 cents. That means still $0.10. Now, if I use that one, if I have 4.7 pip stop loss, that means I'm going to have cents, 0.47 cents. It's not 0.47 cents. Let me just say 0.4 something or 5 something cents. This is not 47 cents. So let's say now I use 10 lot size. 10 lot size, 10 pips will give me $10. Yeah, 0.10 will give me $10. So once I have 4.7 here, it is going to give me $4.7 loss. $4.7 loss. Yes, $4.7 loss. So if I use one standard loss on 10 pips will give me $100. So one standard lot on 10 pips will give me $100. So if I use one standard lot here and I have 4.7 pips, if that one standard lot hits my SL, I'm going to have $47 loss. $47 loss. That's it. Then if I use 10 lot size, if 10 lot size read 10 pips, that is $1,000. Then once I have 4.7, it is going to give me $470 loss. Can you see? So that's how I calculate it. Yes, 65.6 it has showed that 65.6 is my what pips. So if I use 10 lot size, this is $6,500 profit. If I use one lot size, $600 profit. If I use one lot size, $65 profit. If I use 0.01 lot size, $6.5 profit. So that's it. That's how I calculate it from here. And I have this thing here, price range. Where can you see this price range? You can come here. Is it here? Let me check. No. No. Okay, yeah. You come here, you see price range. This price range, I used to use it to calculate pips sometimes. Let's say I'm targeting this low, and trade has already started moving from here. So, and I'm currently at here. It has indicated that I'm moving what? 56 pips currently. So from here to here, this trade has moved 56 pips. So let's say I'm targeting this low. That is 112 pips. That's how I calculate them. I don't need to start stressing my brain. To make it easier, you can use this thing and use your calculator. Is that clear?
Yes, thank you.
Okay, another question from anyone, please. No question. So tomorrow we'll be moving to supply and demand. Supply and demand tomorrow. So thank you very much for joining tonight's class. Take care.